What's going on, guys? Welcome back to the channel. My name is Camilo from Trending Waves. I hope you guys are well. So what we're gonna do today is let's review the SPY and the Qs using our preferred method of technical analysis, which is the Elliott wave theory. Okay, so if you guys are new to the channel, this is what we do here every day after the market closes. We usually review a couple of wave structures, alternate counts suggesting a bullish case and the bearish case for each of the indices. In this case, we'll review the SPY and the Qs. So thank you for tuning in, and if you haven't done so, please subscribe to the channel, give this video a thumbs up as it helps the channel grow. So we're still looking for this wave 4, right? As you guys already know, my count, the preferred one, says that this is the wave 1, this is the 2, we're up in the 3 completion, right? And then the 4. So the 4 has yet to be determined whether or not we have bottomed. So that's a big question. Okay, so let's try to see in the bullish case if that's the case, because yesterday, right, we were presenting when at the start of the video our bearish case, right? Well, not technically the bearish case, and a case where we will see further downside. All right, so let's turn on our labels and let's take a quick look at our main count. And again, the main count suggests the 1 2 1 2 3 4 5 to the third, ABC down, or WXY to the fourth. Now you can clearly see here that the 38.2% retracement, or 412.88 of the wave 4 came into support. Now this retracement is from the low of wave 2 to the high of 3, and you get that support. Now that's a pretty good support, right? That's a pretty good level for a wave 4 pullback. Okay, that's pretty common, so I'm liking that. However, if we zoom in towards the 1 hour time frame, let's dissect price action, the recent price action from the recent highs. Okay, so this is our most bullish count, and suggesting that the wave 4 completed on February the 24th, right over here. So the case here is that January 4th, we topped out in the wave 5 of 3. We then started the A wave, the B wave rejection, and then the C wave. Now, before I continue on, let's make note of something important, right? And that is this trend line. This trend line has been our resistance since we topped and has been confirmed several times. And if the pattern shows, which has proven to be the fact, that every time we hit the trend line, right, every time we try to break out of it, we find resistance and we sell off. Okay, in the instances right now. So it's pretty important for us to keep in mind that this zone is pretty important to break. So once we completed the wave C of W down here in January the 24th, we get our 3-wave pullback into the X. We then reject down to the A, B, and C to the Y, where we are now assuming that the wave 4 has completed in the primary degree. Okay, now the way we're looking at this, guys, in this wave structure is that we are looking for the wave 1 completed here on February the 28th. Out of the 24th, we now have the AB, the A wave, the B wave, which is the 1272 external retracement, came into a confluence of this trendline resistance. So we already know that this was critical. Okay, we found rejection, and now we're looking for the wave C. Now this wave C in the wave 2 in the blue degree, you can see here that it came into a 78.6% retracement. Now I'm not a fan of this deep of a correction in the wave 2 pullback. I normally like to see anything between the 38 and the 23.6, even the 50. All right, so that would have been somewhere in this zone. As you can see here, we got a little bit faked out, right? We thought that the 38.2 was a pretty good retracement because we were counting this in the A, the B, and the C, and then we go, but we ended up breaking lower. So is the 78.6% the sort of like the invalidated? No, it's not, right? Because what makes this count invalidate is a break below the wave 1. All right, so technically speaking, we're still good. All right, so we found support at the 76, and we noted yesterday that we're on the daily time frame, we were finding positive divergence. All right, so that's pretty good. That's helping us out, right? Because let me zoom in this way. We see the price action hits from the January 24th. All right, we hit an extreme low on the RSI. We bounce, RSI bounces, but then we make a new low on price action on the 24th of February while making a higher low here on RSI. So that's positive divergence, and it was good. I liked it. Now going down to the 1 hour time frame again, we are going to wait a little longer, right? We're going to see if this is, because right now what we have here is just evidence of 3 waves, right? A, B, and C, or 1, 2, and 3. Okay, and that's only just a second here, guys. Sorry about that. So A, B, C, you know, that's still valid for maybe the 1, the 2, the 3, the 3, 4, and 5, but we will wait. It's still early to tell. Okay, so just for now, keep your eyes peeled for the 786 or 416. Alternatively, anything below this break here on February the 24th is key. So this zone here is important for us to watch. Now, let me take you and direct your attention to our alternate count, right, which is the wave, the alternate count 2 here. Okay, this count suggests the following. This count suggests that we have so still in the 1 hour time frame. So the third wave completed in January, same deal, right? We 1, 2, 3, 4, 5. Then we get the B wave, 3 wave pull back into the B, and now what we find ourselves is in an expanding triangle. All right. So out of the B wave, we have the wave 1, ABC to the 2. All right, 3 waves down of 5 waves to the A, 3 waves to the B, to the 4, right? And now we're looking for 3 waves down into the 5 of C of 4. Okay, so to make note of something, while on the bullish count, we see that the low here on the wave A was the 78.6% retracement, where we are considering this to be the wave 2. Here we're considering it to be the wave A. Okay, our key support, our key resistance levels to watch for coming into tomorrow and the rest of the week are these 3 zones. Okay, let me highlight this for you. 7A, the 50% at 427, the 618 at 430, and trend line. If by any chance we start breaking above it, okay, then the level to keep on watch for a break above is the 786, guys. As you can see here, the 786 is a confluence level with the trend line resistance. But for now, we're going to keep watch for these 2 zones. What I'm expecting is a fade coming into tomorrow. We get Powell next week. While all of that is happening, markets are making these low, and then something happens at the Fed meeting, and then we get the rip and we get the low, all right, at 50% retracement of the wave 4. Okay, guys, so you know, it's still too early to tell. I'm waiting for this to unfold. I do favor a little bit more downside, okay, as we have been, you know, damn near close to February 24th low. Okay, so let's take a quick look at the Qs. Hopping over to the Qs, let's take a look at our alt count first. Okay, because this one is the one that I find most at play. So out of the wave 3, same deal, guys. You know, 1, 2, 3, 4, 5 to the A, ABC to the B, 1, 2, 3, 4, ABC to the 5 of C of 4. Now, resistance here is at 338.26. 334.64. So these 2 zones, which, you know, clearly you guys can see that is resistance, right? So even if we were to take a horizontal line to this area and we zoom out in the chart, we see that this area here is resistance. This was resistance here, sold off, couldn't break above it, sold off, held support, now resistance. So it is likely, guys, it is likely that we are going to, you know, looking at it from this technical standpoint, it is likely that we are going to break lower. All right, guys. So, and last but not least, the main count. All right, the main count, which will soon turn to be a invalidated count rather. WXY to the 4th completed here on February the 24th. 1 ABC 2. But you see here, guys, the problem here is that the 786 did not hold clear support. We broke below it. Very, very, very bad. So I'm not liking it. Came very, very close to the 100% extension here, and now we're bouncing. So likely we're going to see the following. Let's take a quick look where if this is ABC, so A, B, right? So we'll take an extension, and we're going to look at the 618 and the 50%. So you see here, right, that we're coming very, very close to resistance between the 618 and the 50%. So I'm going to leave this here. You know, also we have confluence, right? I left this line here in the last video. We have confluence of this resistance line where we acted as a support level here on January 28th. Okay, it was resistance here back again on April and May, and then it was resistance here back in February the 16th. Okay, guys, so pretty clear our direction. I'm favoring for the downside. Unfortunately, I know we are all frustrated and looking for this market to bottom, but just give it a few more minutes, a few more days, and we shall see. Okay, as an alternative, here we go. Actually, guys, I wanted to show you. I haven't shown you this chart here, but if by any chance, let's take a quick look at our daily time frame. Let me just put this away here. This was belong to the old count. Here we go. Okay. Oh shit. Anyway, let me just delete this. All right. So I'm taking you back to the daily time frame, and I'm gonna make note of something. Okay. So if I'm gonna show you this count and this alternate count 3, right? So the way we've been operating is that this is the wave 1, this is the wave 2, 3, 4, and 5. Now a lot of folks out there are saying that this was the top already, okay? And now we're looking for this decline. Now we will know this is the case once if and when we break this high. And why do I say that? Because in our count here, this is the wave 1. Actually, my bad. This is not the count right here. So same deal here, whatever, same thing. So this count here suggests that obviously this is our main count. This wave 4, if you guys are familiar with Elliott wave counts, right, we can't break below the wave 1 and close below it on the wave 4. So we're really just a stone throw away from this invalidation. We're just shy of 8% based on today's close. All right, we're very close to invalidating this count. If this is if we break below it, right, just hypothetically speaking, then we have no choice but to direct our attention to this count. And this count, while short term could be a very painful one, it is not out of the question, guys, because the long term of this, man, we have the third wave in the primary degree. So this will still be, this will take however long it needs to take, this B wave or the C wave, I don't know. But the point is that on the daily time frame, we have 1, 2, 3, 4, 5 to the 1 completed on November. And now we're looking for the A wave. We'll retrace in B, right? And then we go down in C. Wherever this lands, wherever this completes is yet to be determined, because we haven't completed the A wave just yet. I don't think this is the case. This area here, or this zone, looks very corrective to me. Doesn't look impulsive, but you just never know with this market and this geopolitical events that we are currently living through. All right, so unprecedented times, guys, historical events, crazy times. But leave this count in the back of your pocket for if and when we do break this low. Okay, guys, thank you so much for tuning in. I shall see you guys tomorrow. Take care.